Now speaking, Patricia Murphy, Senior Vice President, Investor Relations. Thank you for joining us for IBM's second quarter 2023 earnings presentation. We are here today with Arvind Krishna, IBM's Chairman and Chief Executive Officer, and Jim Kavanaugh, IBM's Senior Vice President and Chief Financial Officer. Our presentation includes certain non-GAAP measures such as revenue and signings growth at constant currency. We have provided reconciliation charts for these and other non-GAAP measures at the end of the presentation, which is posted to our investor website. We also want to remind our investors that some comments made in this presentation may be considered forward-looking under the Private Securities Litigation Reform Act of 1995. Our prepared remarks will be posted on the IBM investor website within a couple of hours, and a replay will be available by this time tomorrow. Now speaking, Arvind Krishna, Chairman and Chief Executive Officer. Thank you for joining us today. Our second quarter results demonstrate the success of our hybrid cloud and AI strategy. We saw strength in our software and consulting growth vectors, as well as solid cash generation, which is consistent with our financial model. Clients and partners are turning to us to modernize their applications, optimize their business workflows, and gain a competitive advantage. To meet this demand, we are introducing new innovations, expanding strategic partnerships, and investing in targeted growth markets. This gives us confidence that we will achieve our full-year expectations for revenue and free cash flow. We have made progress in our hybrid cloud and AI strategy. Red Hat OpenShift is a key component of our hybrid cloud approach, along with IBM software and infrastructure. Our consultants help clients speed up their digital transformation journeys and drive adoption of our technology platforms. We have also forged strategic partnerships with Air Canada, Diageo, and Nokia. In addition, we recently announced our plans to acquire Apptio, which offers a virtual command center for CEOs, CFOs, and CIOs to manage their technology investments. This will give clients the most comprehensive approach to optimize their IT environments. AI has the potential to add up to $4.4 trillion annually to the global economy. We are focusing on enterprise AI to address these opportunities and solve business problems. We are building products that address specific enterprise use cases such as digital labor, customer service, and code generation. We also recently launched Watsonx, our enterprise-ready AI and data platform, to help clients and partners capitalize on the AI opportunity. We are making investments in products and skills to seize the AI opportunity. We are working with an expanding ecosystem of partners to co-create and innovate across industries and use cases. We are also committed to trust, transparency, and bias-free models. Overall, we are confident in our strategy and execution. We are well positioned to achieve our full-year expectations and deliver sustainable revenue and free cash flow growth. Now speaking, Jim Kavanaugh, Senior Vice President, Chief Financial Officer. In the second quarter, IBM delivered $15.5 billion in revenue, $2.4 billion of operating pre-tax income, and $2.18 of operating earnings per share. Revenue performance was led by software and consulting, with software revenue up 8% and consulting revenue up 6%. Operating gross margin expanded 140 basis points, driven by portfolio mix and productivity. Operating pre-tax margin was down 70 basis points, but without the year-to-year impact of the divestiture gains, it was up 70 basis points. Free cash flow was $2.1 billion in the quarter and nearly $3.5 billion in the first half. For the full year of 2023, IBM expects constant currency revenue growth of 3% to 5%, free cash flow of about $10.5 billion, and operating pre-tax margin to expand by about a half a point year-to-year. Software revenue is expected to grow at the high end of software's mid-single-digit model, with pre-tax margin expected to expand 1.5 to 2 points year-to-year. Consulting revenue is expected to grow in the range of 6% to 8% and to expand consulting pre-tax margin by at least a point. Infrastructure revenue is expected to decline, impacting IBM's overall revenue growth by over a point, with pre-tax margin in the low teens. Bank of America Merrill Lynch analyst Wamsi Mohan inquired, Arvind, what kind of monetization opportunities are you seeing with AI in the short to medium term? Jim, what is driving the strong transaction processing growth and how much of it is structural versus cyclical? Does this growth have an upside effect on software revenue for the year? Lastly, can you confirm Red Hat's 11 to 13% growth expectation? Arvind Krishna replied, Wamsi, thank you for your question. We are very excited about the progress we have made with AI and the potential it has to benefit our clients and our business. We will monetize AI through consulting and software. Infrastructure will benefit, but not as a direct monetization route. We began this journey in 2019 with the book of business of zero. In the first year, we signed $1 billion of business and now have signed $9 billion with an annual run rate of $2 billion in consulting. We are also very pleased with the initial reaction to the Watsonx platform and the number of projects and client interest. As a model, OpenShift, which was a Red Hat product that came in 2019, grew and doubled each year for the first 4 years and is now at an annualized run rate of $1.1 billion. AI will infuse in models every single product we have, from sustainability to databases to consulting projects. Jim Kavanaugh replied, "Thanks, Arvind and Wamsi, for the question. Our software performance in the second quarter was strong, accelerating to 8% at constant currency. This growth was seen across our hybrid platform and solution, Red Hat, data and AI, and our high-value transaction processing business. We entered the year expecting an inflection shift in TP, and our mainframe programs have been successful, doubling our installed MIPS capacity. We also anticipated a highly inflationary environment, allowing us to get disproportional price increases. Our first half performance was up 8%, and we feel confident that we can sustain low single-digit growth on a normalized basis. This year, with the differentiated price position, we expect to grow at the high end of mid-single-digit." Evercore IC analyst Amit Daryanani inquired, "What gave you confidence that consulting growth held up in the 6 to 8% range in Q2 despite some peers reporting market deceleration?" Jim Kavanaugh replied, "Thanks, Amit. We're pleased with our consulting performance. 90 days ago, we saw a change in buying behavior, particularly in the US, which impacted our backlog realization in the quarter. However, we still posted 8% growth in the first quarter and mid-teen signings growth. In the second quarter, we haven't seen any change in client buying behavior. We had 6% growth and strong signings growth across large and small deals. We grew 24% in signings in the second quarter, driven by digital transformation, application modernization, data and technology, and AI grew 50% in signings. We exited the quarter with a 1.1 book-to-bill, the strongest book-to-bill we've had in some time. We have good strategic partnership velocity and Red Hat book of business is growing strongly. We haven't seen any change in erosion, so we're confident in our 6% to 8% guidance for the year." AllianceBernstein analyst Tony Sacconaghi inquired, "Can you clarify if your comfort with Q3 estimates applies to both revenue and EPS? What drove the change in software margin improvement from 200 to 150 to 200 basis points? Is the improved software revenue growth due to Apptio or other factors? Are you expecting any substantive revenue from AI and consulting in software this year, and why would that not impact your outlook?" Jim Kavanaugh replied, "Tony, our revenue guidance for the full year has been raised to the high end of our model. This is due to our strong performance in the first half of the year, including the acquisition of Apptio, which is expected to close in early fourth quarter. We are seeing mid-single-digit growth in transactional processing, hybrid platform and solution, as well as mid-20% year-over-year growth in upsells from expiring ALAs. The margin dilution effect from Apptio is estimated to be between 150 and 200 basis points. We expect this to be a quick accretive business." Arvind Krishna replied, "Thanks, Jim. We're seeing strong growth in our data and AI consulting projects and software subsegment. We had double-digit growth in the second quarter, and we expect that trend to continue. We anticipate that AI will be a major contributor to our revenue in 2023, and it's already included in our estimates." Credit Suisse analyst Shannon Cross inquired, "Arvind, what has been the interest level in AI by geography? What were the key drivers of the Apptio acquisition and how will you leverage the $450 billion of anonymized data gained from it?" Arvind Krishna replied, "Thanks Shannon, AI is a global phenomenon with North America being the most advanced in terms of enterprise readiness. Western Europe and some South American markets follow, then Asia and the global South. Japan is quick to experiment but slower to adopt. Governments, enterprises, CEOs and CIOs are all interested in AI for its potential to interact with clients and employees. The key drivers of Apptio's acquisition are the need for a virtual cockpit to span hybrid landscapes and the ability to benchmark spend across enterprises. We expect to monetize this data into a large language or foundation model and provide better predictors of spend. Our goal is to expand Apptio's international footprint and increase penetration in larger clients." Morgan Stanley analyst Eric Woodring inquired, "Arvind, what is your current appetite for M&A post-Apptio? Are you looking at any other end markets or solutions? Has valuation become more restrictive?" Arvind Krishna replied, "Eric, our strategy is to focus on hybrid cloud, data and AI, automation, cyber, and consulting properties. We have the capability to invest up to $20 billion over a 3-year period, including the ability to raise additional debt if needed. Valuations have not decreased, but they have not increased significantly either. We look for properties that align with our strategy, provide synergy, and are larger than a few $100 million. They must also be accretive within 2 years. Apptio was a great fit as it hits 3 of our 4 criteria. If you have any suggestions for similar investments, please reach out to me." Stifel Financial Corporation analyst David Grossman inquired, "Arvind, what have you learned from repricing the transaction processing portfolio and how could other segments of your business benefit?" Jim, is the $500 million working capital tailwind factored into the free cash flow guide correct? Arvind Krishna replied, David, pricing in TP certainly benefited this year due to the mainframe cycle and the value clients saw. There was a price increase due to labor inflation and the strong dollar, which was taken well by the market. I don't expect to see similar pricing on TP going forward, but moderate increases may be seen due to pricing. In consulting, labor and inflation are built in and we may pass some of that on with a lag. For other software, pricing may be affected by labor inflation, but we must remain competitively priced. Our renewal rates indicate that our portfolios provide tremendous value to our clients. Jim Kavanaugh replied, our strategy has always been to price for value, and last year we experienced an inflationary environment that was 3 to 5 points above historical averages. We believe pricing optimization is directly correlated to the value and differentiation we offer our clients. We've seen good take-up with our mission-critical transaction processing, human capital-based business, and consulting services. Entering the year, we had a shortfall leaving much more on the balance sheet than collected in working capital. We expect working capital to be around $400 to $500 million, which is a tailwind from last year. The remaining $1.2 billion of free cash flow growth year over year is due to improved operating discipline of our revenue and operating margin and cash from profit. BMO Capital Markets analyst Keith Bachman inquired, Arvind, how do you anticipate the increased efficiency of software development due to Gen AI impacting the consulting business? Jim, what is the total MIPS growth you've experienced and how will you use pricing to leverage that shift? Arvind Krishna replied, in response to your question, Keith, our consulting team works with clients to optimize business processes and data architectures. We also work on mission-critical systems such as financials, supply chain, and cyber resilience. Over a 5 to 10-year horizon, we expect to see a 30% productivity increase due to the use of Gen AI and large language models. This is an advantage for IBM, as it allows us to win more work and reduce the labor pool needed to drive revenue. As an example, our code assistant for Ansible can help developers become 60% more productive. Overall, IT deployment productivity increases between 10 to 30%. It will take a few years for clients to gain full confidence in this technology. Jim Kavanaugh replied, thanks Keith for your question. We are pleased with the performance of our mainframe program, especially considering we launched it in a highly seasonal quarter last year and grew 77%. This year, we saw a 30% decrease in the second quarter, but on a 2-year CAGR, we have seen the most successful program in the mainframe. This is important to us because it drives a multiplier effect around transaction processing. We have seen a 2x installed MIPS shift over the last program, and in the Z16 program, we are already up 120 to 130% on installed MIPS capacity. This gives us the confidence to take up the transaction processing model to low single-digit growth from being down mid-single. Melius research analyst Ben Reitzes inquired, what is IBM's unique position in AI consulting and software to help customers lower costs and increase growth? Arvind Krishna replied, Ben, thank you for your question. We have a distinct advantage when clients want to train models on their data and protect their intellectual property. We can guarantee that we won't give away their data in any form. We also don't use the learnings from the data implicitly or explicitly. Additionally, we understand that asking certain questions can reveal side-channel information. This is especially important for clients dealing with regulatory compliance, reports to the FDA, potential side effects, and proprietary formulations. We estimate that at least 30% of the AI opportunity is in this area. We are taking a conscious strategy to not constrain the model our clients want, and our consulting teams will work with all models, including open source and IBM models, to help clients decide which is best for them. This helps us become better advisors and gain revenue. We are in a good position as we enter the second half of the year and look forward to sharing our progress. Patricia Murphy replied, thank you all. I appreciate your questions. Thank you for joining today's call.